Hey traders, Raghee here, and in this free video we're going to talk about how to have some resiliency in a market while it's selling off. One of the trickiest things about being a trader on a day where the broader averages, for example on Monday, were selling off, really were twofold. Number one, the reason that all the selling was happening is because the market was dealing with two unscheduled and certainly kind of an unknown event. What I mean by that is if we had, for example, a statement from Jerome Powell sending the markets lower, ES, YM, NQ, RTY, we know that it's probably not going to be reiterated, depending upon the market response, again. For example, if this were a key earnings release sending the market lower, we know that we won't see another earnings release for another quarter. The thing that's interesting about what happened between the escalation of the trade war and then the response in terms of the devaluing of the yuan is that those aren't things that we can say won't happen again. We could see another comment, another tweet, another headline that would escalate the trade war narrative. We could see another response from China after that would happen. So there's not a finite quality to the sell-off that we saw yesterday. So it's very difficult as a trader to sort of fire off these trades in an environment where in hindsight it's going to look really easy. Oh, that was the low, right? Oh, that should have been the day. It's really easy in hindsight to say that was the case. So what we do instead is we start searching for relative outperformance. And the two names that stood out were basically, we kind of said on a day like yesterday where the markets were in meltdown mode, it seemed like nobody could get enough of their lattes and their Big Macs. And you saw that McDonald's and Starbucks really didn't respond too heavily to the sell-off. And those were two very easy trades to sort of see as relative outperformers, set the order up, and then to see if the entry would trigger. So we did get those two opportunities on the weakness, and that's the down candle here on Starbucks, and that's the down candle here on McDonald's. So taking advantage of support, that is the confirmation for the entry. And then why Starbucks and McDonald's? Well, number one, they're both involved either directly in the broader markets, like McDonald's as a heavily weighted name in the Dow, and Starbucks is a heavily weighted name in the, let me show you here, the XLY, the discretionary. Discretionary is particularly important, that sector in the NAS. So this is where we start to think about what's on our radar, what's pinging away, where do we want to sort of set our sights on different opportunities. And this is what ends up, pinging away on our radar. And that's where the importance of relative outperformance comes into play. In a market that's melting down, where is the resilience? So yesterday I talked about having a resilient book, or in the case of, any kind of market that is sort of under fire, any kind of market that's being barraged by negative news, tweets that are concerning traders, any kind of weight, dark cloud that's hanging over the market, that's sort of the way in which we look at which markets are able to be more resilient, which markets are able to withstand that barrage of the news or whatnot. Again, know the difference between events that are of the scheduled variety and likely not to be repeated, and know the events that are of the unscheduled variety and can continue to be repeated, or in the case of what we saw with the tweet and then the response, perhaps an escalation. That's what made yesterday so difficult to want to step in and buy. But then you look for the relative outperformance names, McDonald's and Starbucks, and you know that you can probably have a pretty safe place to put a trade and limit the downside. Okay. All right. So that's just a kind of a follow through on what we did yesterday into today. Go take a look at the charts of McDonald's and Starbucks. Take a look at their weighting in the Dow, in the XLY. Take a look at discretionaries placed within the NASDAQ, and you'll see where from a futures, well, and Forex too, central banks being so important right now, but from a futures perspective, why these stocks would be really great places to take advantage of different trades. In the premium video, we're going to talk about the rest of our book. It's been very resilient. It's actually hitting a 72% return as of the close today. Yes, there was a swing. We'll talk about how you can build your trading book, which is just a collection of open trades in such a way that when this barrage comes, you're a little bit more ready to handle it. All right, that'll be in the premium video, and I'll see you in the next update.